Perfect. Good morning, everyone. I hope everyone had a great start. So let's kick it off with this wonderful panel. Obviously, I don't have to, or I don't tell you something new when I'm saying we are in a world where geopolitics are back, industry policy is back, and of course, AI is resetting the world. Evgenia, when you look at the world right now, what is the one shift that changes the game for Europe the most over the next 5 years?
I think it's not a shift that's happening just in Europe. I think globally, the shift is happening is actually deglobalization. I think we're increasingly looking inward. And as that shift is happening, we're seeing capital, technology, data, supply chains fragmenting. And as they're fragmenting, AI is only accelerating that fragmentation and the differences we see across the world. And so when it does, I think in that deglobalized world, the value is now coming not just from global platforms, but it's coming from AI applications that are going to be embedded in real world, in local, sometimes regulated systems, finance, healthcare, supply chains, infrastructure. And this is where we as a firm invest. Companies that put AI at the center of mission-critical systems, and this is where complexity creates not a barrier, but a moat. So I think the biggest trend for me is deglobalization, and that trend is giving a chance not just to platforms, but to systems, and this is where Europe is strong.
Perfect. Lina, do you buy that, or do you think something else?
I think we're going to talk about AI a lot today, is my feeling. I agree with a lot of what you say, Evgenia. I think for me, I'd kind of, just reframe it as the game changer being how much will Europe lean into AI. And I think if you look at the numbers now, and especially last year, I think the first half of last year, US GDP growth was like effectively just AI investment, right? And like for Europe, it doesn't really show up in the numbers yet. I think also if you look at like public discourse, US and China, they talk about AI as like this race that they have to win, and like they're very aggressive about it, for better and for worse. But if you look at our discourse, it's a lot about, what are the guardrails we need to put in place? Like there's a lot of caution, but we're not really building anything ourselves. So that I really worry about like the divergence and like how that will compound over time. And I hope we don't get left behind.
But speaking about the US and AI, obviously AI is heavily driven by the US, right? And the major forces are venture-backed companies like NVIDIA, Amazon, etc. And Europe, somehow by decade-old incumbents, right? Still. Marie-Hélène, if tech is taking over, what is the biggest structural constraint in Europe that we need to fix in order to create more global tech winners?
Well, I think, as the title of the session says, we need to make venture capital in Europe work. And that's an urgent necessity. That's not the marketing and nice to have anymore. And to explain that, I brought a slide, maybe we can have a look. It's an old slide, but I think it visualizes very, very nicely why venture capital matters more than ever. So what you can see here on the bubbles is companies that were built from scratch within the last 50 years and that now have a market cap of 10 billion or more. And if you now look to the US, that's the European picture. Can we have the next slide? That is what in exactly the same time frame has happened in the US. And majority of these companies are venture-backed. So we need venture capital to work in order to grow and scale technology here in Europe. I mean, we have excellent talent. We also don't really have a problem in pre-seed, seed stage, but we have a tremendous problem on making these companies big. And why is that? And I think for me, that's, to your question, the biggest bottleneck we have is that our capital market is not functioning. And you have heard that before many, many times. We are talking for a decade and more to fix that. And I don't understand. It's not rocket science. I don't believe that, we can come to a 28 market where we have a European stock exchange as a brand, because to bring those together, we will never manage in Europe. But what we can do is actually to harmonize listing rules, to harmonize the profit taxation systems, to set certain harmonization and sets along, that we can build then a technical exchange on top, like a Euro Nasdaq, if you want, so that you can trade on this €1 Nasdaq all titles in Europe. Why is that so important, the capital market? Because we need, in order to make venture work, liquidity. So the capital that is invested by investors need to be returned to the market, and that only happens with exits. Exits either by selling these technology companies to corporates or IPO on the stock exchange. So if you don't have a stock exchange that is working in Europe, this money will not return into venture, into the system, and we will not then be capable to grow those European technology leaders within Europe. And I mean, just to say, pension funds, because we always say that, you know, they are investing European pension money by 40% asset allocation to US titles. So we are nurturing with your pension money US technology companies. So something is really wrong in our system, and we need to fix that.
I think we should fix that, right? So, but Lina, if you go one level below, right, when we talk about venture capital, so, I mean, on the one hand, we need more capital, but what is Europe doing wrong in venture capital, and what should we do differently to build more global winners?
So, yeah, we invest first check, typically like first institutional money in, and you say we don't have a problem at pre-seed and seed. I think there's some problem, because I think there's a lot of friction still for entrepreneurs in Europe to build. Maybe just an anecdote from our German portfolio. I'm based in Berlin. We've got a lot of companies in Germany. A bunch of them choose a Delaware topco because it's a nightmare to build a venture-backed company, GmbH, in Germany. The rest of them wished they had a Delaware topco, the ones that went for a GmbH. I spoke to a German founder recently who's raised hundreds of millions of dollars, and he said he'd never build a company in Germany again. He'll definitely build again, but not in Germany. I think labor laws make it super difficult for a scale-up to take like real risk. So I think there's so many friction points, even at the earlier stage, for entrepreneurs to build in Europe, and I think we need to look at that. And then maybe just calling out EU Inc., because I can see an EU Inc. cap. So Andreas Klinger is doing some really cool work on like harmonization and lobbying governments to EU governments to basically have like one standard legal entity across Europe, which I think would, at the early stage, be a real game changer to make it easier to fund across borders, but also to scale across borders and, yeah, take investment.
Cool. Yeah, I mean, Andreas was there, Steffi, I think last year, right? He was with his EU Inc. So hopefully this we will solve, at least in Europe. But I think on the growth side, Evgenia, you're a growth investor. Looking at the growth journey, where does Europe lose momentum, right? What I want to say is more like, or ask on the path from a great company, right? So because we have a lot of great companies, to a category leader winner.
100%, and we sort of invest at an acceleration stage, actually, and I wholeheartedly agree with Lina and with Marie-Hélène that in the world that is deglobalizing, as I mentioned, Europe has to think as one, right? There are many ways where to be able to win, we have to remove some of the friction. Great companies are born out of friction, out of entrepreneurs noticing a problem and fixing it, as you know, Max, but let's not add more friction to their journey. And I think it's not for the lack of great ideas. Europe does not lack ideas. Just think about everything that we have contributed to the world from Renaissance to today. Where we lose momentum is conviction during the scale-up stages. And that comes through every single lever. And so for me, it's about our risk appetite. It is about our talent density. across Europe and talent mobility across Europe. And it's about our adoption by the large corporates. And I know there's a lot of corporates today with us at DLD, so it's our ability to also purchase innovation. And so in the US, when a company reaches great AI momentum, we say, go win the world. In Europe, we say, oh, hang on a second, don't lose it, right? So let's abandon that mentality of scarcity, and let's also fix our mentality of abundance and our winning mentality of going big when things go right.
Maybe to add on that, I cannot agree more, because I think capital is one thing we need, but equally important, we need customers. We need to generate revenue for those companies, or those need to be capable to generate those revenues. And this comes either from corporates that are developing more risk appetite, but also a lot from the state and from the government. And we should not forget all the big ones like Palantir, Microsoft, and so on. They were the first customers they had came from the state. And why is that so important, these first customers? Because they are anchor investors, they create trust, and they unlock dilutive capital. So then if you are a scale-up and you have some solid customer base, you can go then to the bank and get some debt there. And this is so important, you know, that this flywheel again is working.
Lina, anything to add?
Yeah, maybe just one observation from the very early stage, which is new. So in the last year or two, we've started seeing European founders, even for their first round of capital, to go to the West Coast to try and raise their first round from West Coast investors. Actually, ironically, they often come home with a European term sheet, because the European investors then also go out to the West Coast and have European founders pitch to them. But they can command higher valuations out there, right? So we think a lot about is now the time for us as a first check fund to just be like even bolder, less price sensitive, and just make sure you capture that talent before they like go out there and inflate prices, and in the worst case raise from a value fund, and we lose them very, very early on. So I'd say it's a fairly new development on the pre-seed stage.
Interesting. Okay, so let's land this with action, because otherwise we are politicians, but we are not. We are investors. So what is the one concrete thing Europe should do in the next 12 months to become more competitive? One word. Lina, start us off.
Reverse the brain drain.
Reverse brain drain. Marie-Hélène.
So if I would be a politician, or my claim to politicians would be, lock the 27 finance ministers into one room and not let them out before they have not harmonized listing rules. But I'm not sure this is that I can trigger that. But I think it would be financial literacy for your kids, that you enable that and assure that, and to invest in VC, preferable one of us. Feel free.
Evgenia.
I love that idea. I'll eat the key from that room. I would agree actually with what Marie-Hélène brought up, is purchase innovation, right? Whether it is commit 10% of your budget as a procurement leader to AI native European startup early in their journey, give them trust, or perhaps buy that business, right? Don't think that you will build everything internally. And I think for me, it's not just about fixing the supply, it's fixing that demand and creating the flywheel effect where we can surf it.
You guys are cheating with too many words.
One word.
Like,
Buy innovation.
Buy innovation. Marie-Hélène.
Invest in VC.
Reverse the brain drain.
Okay, so all right. So we heard now 3 important points, right? So let's make it DLD real, right? So please stand up. If you can support at least one of the initiatives with your time, energies, or skills, so show us the world. Come on. Who can do this? Only this?
Go on, guys.
You can invest in VC, please. You can invest in
Christian,
venture
I think
capital.
you have money, right? So you can stand up. So, okay, so not a lot. So I think we should change that. So I think, but nevertheless, it's a good start. So if you can support these 3 ladies with these initiatives, please come to that. With that, we end our panel. Thank you so much, and make Europe great again. Thank you so much.